Madhu and Rajvir, welcome to another episode of Aussie Property and Wealth. There is a lot of negativity in the climate, be it like high inflation, high interest rate, CGT discussions, negative gearing discussions. We wanted to see if we can unpack what is really happening on the ground and provide some clarity to people, right? But first, I wanted to just get both of your, feedback on what is that you are hearing from your everyday interaction, whether from chatting with your clients or Rajveer, you chatting with your clients. The initial thoughts on what is that you're really getting feedback from the clients.
I'm a glass half full person. I'm always looking for options and solutions because I started my journey in Australia during the recession.
Mm,
Even in the
mm,
recession, I grew because I did not think recession was going to be forever. Because of that, my wealth grew. And then came the 2008 global financial crisis.
mm-hmm.
That is the year I bought the property that I'm sitting in. And the
Okay.
valuation from the banks came lower than my purchase price.
Okay.
And the vendor, who was my friend, he said, whatever is missing from the equation from the bank, you pay me later.
Mm,
And this
mm,
property has more than doubled after 2008
mm,
global financial crisis within 5 years.
mm, mm, mm,
So
mm,
I always think, yes, there is war. Yes, there was COVID and everything, but
mm,
this too shall pass.
mm.
It is
Brilliant, brilliant.
always going to be something or the other, if not anything else in the world. You could be having an ill health or
Correct,
loss of job
correct.
or, family deaths, incapacitation and all of that.
Yeah, yeah,
It's really about what can you do today
yeah.
and not
Brilliant, brilliant.
missing that
Yeah,
window of opportunity, which is actually fantastic. People were killing themselves to
yeah,
try and pay more and more, and
yeah.
that's how the property doubled in the last 2-3 years around Townsville and Cairns and Perth, and so
Absolutely.
regional areas also like when Bunbury went nearly 80% in
Correct,
like 3 years. So
correct.
I think this is fantastic for people who are prepared
Yeah,
or calm
yeah,
and who are at the right age where they have a runway of paying off their property
yeah.
and still have a looking forward to their retirement planning.
Right, right. Okay,
That's
excellent,
that's
excellent.
the kind of conversation I am having with everybody.
Okay, okay.
We have clients who have y- are going to probably take a haircut on their income. Some IT professionals have said clearly there have been gaps in their contracting,
Mm,
but
mm, mm,
we are telling them what to do in these times. The
mm,
only thing is don't overpay
mm,
because that property which looked really dangerously amazing
mm,
is out there, but not
mm.
at that price.
Yeah,
Prices are going to steady. They're
yeah,
going to fall probably in 2027. We still think 2026 prices are still rising in some areas.
yeah,
So pick your yield, pick your structure. That's the
yeah.
most important thing. And 100% please put some money in the offset. Don't
Absolutely.
use your last dollar.
Yeah,
Don't get scared and fix your uh, rates,
yeah.
because rates in the banks are always amortized in such a manner that the house never loses.
Correct.
So
Yeah,
the fixed rate repayments versus your interest only repayment on a variable. I always think that in the last 20-30 years of my business, I have always found, other than the 1.99 during COVID, which nobody can beat,
mm, mm.
that was, of course, a gold mine, and
Yeah,
people who did fix it for 5 years were really winners. But other than that, in this day and age, at 6%, 6.5%, fixed rates are slightly higher than variable. So I am suggesting that you can fix half at best, but I'm equally happy if you structure it correctly with
mm,
interest only. You're still going to be at a yield of 4.5, 5%. It's not that bad on a negative gearing scale.
yeah,
Where there is, properties are in the SMSF, again, we are saying just take a normal 80-90% buffer, but get started. It is
yeah.
a time in the market. It's not timing the market.
Absolutely, absolutely. Very well put. Thank you for putting a really, positive spin, especially, listening to somebody who has gone through multiple, other major events, and, getting a positive news is definitely an feedback everybody should be listening to. Rajvir, what are you looking at from your point of view? I think the challenges you must be listening slightly different, isn't it? Like,
Yep.
more
hmm
capital gain tax, negative gearing, and everything. What is that you are now having conversations every day or hearing?
Look, I'm 100% agreeing to Madhuji's uh, conclusion around the scenario happening with inflation or a downturn in the job market, or having a fuel prices skyrocketing to $3.50 for diesel, let's say.
Mm,
But it does create an opportunity. But simultaneously, the problem we encounter as an accountant, it's a cash flow for us.
mm,
And the problem we have identified with the small business, more importantly, that they are in a cash crunch right
mm,
now.
mm,
Because
mm,
what happened, they if you look it up, tax itself, it's evolving in a sense that they are introducing legislation after legislation.
mhm,
Now, what we start doing since January, we start to pay super on payday super for few
mm,
months.
mm,
Now,
mm,
what they do have a debt in December quarter, and plus every pay they have to pay the super. So, which means
mm,
they build up a debt for the super
mm,
up till December
mm,
quarter, and plus
mm.
they have to start paying every pay run, every week, possibly super to their employees.
Yeah.
Yes, it's an obligation for employer. Yes, they have to pay it on time, but from the cash flow point of view, they burn it all. Okay. Then
Right.
Iran, America and Israel attack Iran. Worst
Yeah.
thing could happen is that it's creating more nightmare for small businesses.
Mm, mm, mm.
Okay,
Excellent.
so that's a spiraling effect overall. And tax, if you read a few news, tax office is also assisting small businesses with the payment plans and whatnot. Uh,
Correct.
but by saying that, by not looking at more into the negative side of cash flow aspects, yes, it's great opportunity for people to buy a property at a discount, because normally
Mm.
it just go up and up and up. Now it's pretty much stable at this stage.
Mm, mm. I think like very well put. Like it's a completely different angle of cash flows and everything people may be overlooking. But
Yep.
overall, my conversations has been primarily with people more in line with like what Madhu mentioned. Like the whole world could be different, but like for you, like your finances, your this one is what is really important. People are were financially ready, but hesitating to buy their first investment
Mm,
property,
mm,
waiting for things to clear up. There is always going to be something there, right? And also the other interesting conversation I had with somebody like yesterday is one of my client like bought a property, has grown really well. We're just having a chit chat about everything. He started about all the negative things, then he like casually talks about like I'm planning to buy like a high end car, like 120K ish car, like he says like that's what I'm doing, research and everything. So I feel people also need to have the right priorities. Sometimes they go to the luxury side of things and like hesitate
mm.
do the right investment side of things. I think the prioritization also comes a big part of everything that we do, especially more so in this instance we are talking about.
Le- let me put a bit of a salt and pepper into this conversation,
Mm.
because I've had that many women come to me
Hmm.
who are in situations where their finances in a marriage has been very poorly managed by
Okay.
the husband,
Mm, mm,
and they did not know anything. I've The most striking one was a bank executive at 52. She did not know her tax is not paid for 2 years
ooh, okay. Mm-hmm.
Okay.
because it was all being done by her husband,
Mm,
who's now retired. But
mm,
saying that, people are still divorcing, people are still having babies.
mm,
I
mm,
know people who are saying, what do I do? My wife is suddenly pregnant, but
mm,
I want to buy this property and I bought it off the plan. I did not
mm,
tell you because, things were going well.
mm,
So I
mm,
was like, sell
mm,
your shares in India, bring the money here.
mm.
That was my answer because, we need the buffer for her maternity leave.
Yeah.
Yeah,
And somebody else who's actually divorcing, we
yeah.
sat on the financial, binding agreement conversation. I often sit in these conversations. with the mediators, what we would
Mm.
like them to be, so that everybody who leaves a
Mm.
relationship is still financially sound.
Mm.
So I think life will carry on. For every day the sun
Yep.
rises kind of attitude is the way to go.
Mm.
And secretly, 90% of the conversation is an upgrade of a house.
Yes. Yes.
It's always
Nobody
there.
is saying, nobody is saying, I will do it, when the war finishes. I have not
Correct.
heard that.
Correct.
Everybody is like, oh, my kids have grown up. They're, now in high school, and we really cannot do this two-bedroom house and,
Yeah.
apartment. We need a bigger house.
Mm.
Or this living room is very small. Last I heard yesterday, this lady told me that everything is fine except if my in-laws want to come and stay, the living room is very small.
Yeah.
It's like we're sitting face to face on the dining table. And when you
Mm-hmm.
turn around, people are working on the dining table. So
Mm-hmm.
I think people are just doing their life.
Yeah.
If
Yep.
Yeah.
you see where they are at in life,
Mm.
somebody who's young, they want to buy those cars and all. Why not? Right? But just
Mm-hmm.
our job is to actually push them in a direction where they can strike a balance
Mm.
with their plans and also their goals.
Mm-hmm. Very,
What they
very
aspire
interesting. Like, how human mind is working and making major financial decisions, how they are weighing in. It's very, very interesting, topic. And one especially item that strikes and that I always have this conversation is people who are in the fag end of the career, like, upgrading, signing up for a bigger mortgage for that additional comfort, not realizing what they are taking into. And sometimes, especially when the kids are grown and like, kids are moving out of the family, we also seen this situation. Kids are moved out, like, different city. Now the rooms are empty, like, but they are
Mm.
left with a bigger mortgage, right?
Mm.
And kids may be
that
supporting
is
them,
where the
but that is also
aspiration
harming them.
comes in. Yeah.
Yeah, yeah,
The
yeah, yeah.
aspiration of giving my family a bigger home,
Correct.
my daughter will get married from here or whatever, those kind of very
Yeah,
basic
yeah.
Mm.
feelings
Mm.
Mm,
rather
Mm.
than the actual $2
mm,
million mortgage at the closer end of
mm,
your,
mm.
Yep.
sort of work life,
See,
which we are also saying. So it's all about sequencing. That's what I've realized.
correct, correct. And also, like, I think listening to both of you in the last few minutes, like, what is really made very, very clear is people often go to their mortgage brokers or the tax accountant when they want something done, right? I think
Yep.
this situation is where I think they need to go to the trusted partners to, like, have a good conversation. This is what I want to do, or thinking of doing it. Is that right? How we,
Yep.
channel, because the right, conversation, just having that conversation may open up new opportunities. I find people make the wrong assumptions. Oh, I thought, like, there is no equity in the property. I thought, like, my borrowing is exhausted or something like that, right? So having conversation with a trusted partner, this is what repeatedly I tell people: don't pick a mortgage broker or bank because they're giving point something. Like, pick somebody who's able to give you the right, like, number one, time, and the, information back, advice back, right?
Mm. Mm.
I think this is more important now. If anybody's feeling stuck, have conversation with your right partners, and, like, you will definitely get some outcome back.
Mm.
I think that's one of the reasons why I love working with both of you in the team. We all have different working relationships with several other
Yeah.
partners. But
Hmm.
this morning I picked up the phone. I asked Rajvir about Division 293 from extra contribution into super.
Hmm. Hmm.
That, I mean, I thought I know, but
Hmm.
he clarified it for
Mm.
me.
Correct.
So I
Yep.
think having
Yep.
this ability in the team is exactly what you should do. You're a sum total of the five people around you.
Correct.
So the people individually who are doing their taxes or whatever,
Yeah. Yeah.
they should have, all we're missing is a lawyer,
Correct.
is have
Yep.
somebody that you can turn to for advice,
Yeah.
for execution.
Mm.
Correct.
Mm.
Okay. I think I also had the same, feedback on Rajbir, right? We would think, like, we know few things, like, then he pulls out, hey, Dilip, this line should be reworded differently. Otherwise, like, there will
It's
be,
a
like,
trouble.
in this scenario, especially in a tax situation. What happens is, unless touch wood, like, unless something is, audited or something, even if you're doing something wrong for years together, you may feel like everything is okay. like
Yep.
but somebody with the lens of like what Rajvir brings in, saying that okay, these scenarios it may not have happened, but if it happens, you could be in trouble. It's very, very, very important,
Yep.
and that is something where like the expertise really comes out when situation get complex. The expertise really comes out.
Yep.
Can you please highlight about your SMSF specialist, skill that you have, Rajveer? Because I think it's a bit underrated. Everybody
Correct.
thinks that we are all SMSF partners and
Hmm.
negative gearing specialists. If you ask,
Mm,
everybody knows
mm,
because some friend has already done it.
Yep.
When we talk to them, they often don't understand that this is a special skill.
Yep.
So over
mm,
to you, Rajveer. Please tell us about your
Look,
specialist skill.
from my experience in the world of SMSF or investing or more predominantly negative gearing and capital gains tax, uh, people look for plain answers. They think that hey, this is the transaction, my friend did it, so it would applicable to me. I
yeah.
usually say, look, if your friend did it, it doesn't mean you have to do it. You have to look it up the risk aspect of one transaction. For example, one of the guy came to me, his friend buy a land, build a property on it. One of the accountant advised that it would be capital gains tax, but clearly it's a revenue asset and it should
Mm,
be included as an ordinary income of that person. What it means,
mm,
there should be no capital gains discount. There is a margin scheme issues, blah blah blah. But
mm,
by saying that, they usually tend to look it up why he's saving so much tax. So I usually say it's a self-assessed system. You do
mm,
whatever you want to do right now, but down the track you will get audited or reviewed. And guess what? It's 300% tax liability or tax
mm,
penalty imposed by tax office. From
mm,
SMSF world as well, we also work with the financial advisors and mortgage brokers where we help uh, people to administrate the administration of their super fund. We saw a few mistakes if they try to do their own super funds. For
mm,
example, they miss out some provisions in their SMSF deed. They buy off the shelf. One of the
mm,
guy I had back in the days where he set it up SMSF by himself, thinking that he's doing everything right. As you mentioned, Dilip, he missed out one of the provision where one of the strategies in that trust deed, he excludes specifically property because off the shelf deed would charge $100 extra.
oh
So,
my God.
so he was at the time of settlement. Bank said no, you didn't mention that you can buy that
Yeah,
in your SMSF deed. Now it's a problem. It was a quick fix, but he ran out of time.
yeah,
You know,
yeah,
so that's what we deal with. In essence, that we help clients,
yeah.
but we educate client as well, saying that hey, don't think that there is a perform answer for everything.
Mm, 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 I think SMSF is such a sensitive matter. People take it lightly.
Yep,
I think they need to work with the right experts to get the documentation, not just look at the few $100s that they may be saving,
yep,
and without unknowingly they're taking on a new big headache, right?
yep.
So yeah, I think so. The crux of all the conversations that have been happening is there is a lot of opportunities out there, but all of it is like it needs to be properly evaluated, not just like look at the headlines and like step back from not doing anything. You could be harming yourself, right?
Yep, yep,
But by the same token, I think the person who wants to buy a car, if he bought the car after he built his portfolio of
Correct.
investments,
Correct.
then the car would not be a problem. But in the
Absolutely.
case he buys a car first,
Yeah.
and that's what we teach the migrants, saying, it
Mm,
is how you
mm,
keep and preserve your ability to borrow for your
yeah.
first home.
Yeah.
yep,
Otherwise, you'll be going into this rent, uh, you know, rat race kind of a thing where the rents will keep on increasing, your income will not keep up. Therefore, the savings that you have, which you shouldn't have bought the car with,
Yeah.
should be preserved for after you bought the house.
Yeah. In
Then
fact,
it's much easier to get a car loan.
yeah, in fact, the context of the conversation was that, like, he was paying some sort of a huge tax. He's an high income earner and everything, and super has not been grown because he was working for an overseas service provider, and same thing. I told him, before you make any decision, sit down with your accountant, have a conversation. Number one, to
Yep.
see if there is any other way of optimizing your tax, then probably take the
Mm,
decision.
mm,
Is agreed to that part, but I feel a lot of them executed until after it is done. Hey, I just signed a novated lease for this much, rather than having that conversation before with the accountant and everything.
yep.
But it is interesting. All I feel it comes down to having clarity on their personal situation and getting validation from the experts before going down that path is what I feel. Yeah.
Yep. Yep.
So now, if I have to ask, one simple one-line question to both of you for an yes or no answer, is it possible to build wealth through property in this current climate for someone? Would that be an yes or a no? I know there will be always conditions apply, but if you have to give one word answer, what would be yes or no? Madhu?
Uh, my answer is always a yes. It is the
Okay.
how which comes in.
Right.
Because of my background in as an architect, we were always taught that you have to build. This is the land that the client owns.
Mm, mm, mm,
So it's always what you have,
yeah.
Mm,
what can
mm,
be done.
Mm,
So we may go down the route of using negative gearing
yeah.
or any other kind of structure, which is
Mm,
where the expertise of an accountant is required.
mm,
But
mm,
we will always find the options of maybe doing salary sacrifice,
mm,
maybe creating a trust,
mm,
maybe opening a company if you are a self-employed person, and then managing your trust, your taxes in a manner that you do save. You can have a bucket company within
mm,
different structures, so
mm,
that you can distribute to your older children at some stage. There are so many variations that you can do.
mm,
And also, I think the biggest lesson is not to let the bracket creep happen in your life.
mm, mm,
mm,
mm,
mm,
If somebody earns more, I always say that, can I actually tighten your budget? Do you mind?
mm,
I do
mm,
it all the time. I always start with the budget. Saying, this
mm,
is how much you are earning. You're earning 17,000
mm,
and you're
mm,
spending 13,000.
mm,
You
mm,
really need to spend 13,000 every month.
mm, mm,
yep.
mm,
Yep.
So we'll say things like, put your life insurance
mm.
back into super. The contribution will take care of it.
Correct.
Take it away from your cash flow.
Yeah.
Little things like that, which are nuggets.
Yeah. Yeah.
People, if they can actually use, we can still preserve their borrowing capacity.
Mm,
You
mm,
don't have to have a property which is 7% yielding,
Yeah.
because it's a balance of the capital gain and the yield. So I think we always look for the long term outcome.
Mm,
mm,
And yes, you can still find a lender which will give you more borrowing power than the big banks. So you start with, of course, your budget, then look
mm-hmm.
for a suitable lender.
Yeah.
mm,
Now that loans up to 40 years. And we can also do interest only on owner occupied up to 15 to 20 years.
Yeah.
So it's a mix and match, which I have done in one of the very, like, the second property hasn't settled yet. When the client came to us 2 years ago in their 50s, they only had one property.
Mm, mm,
They had lost a lot of property, property equity, which they had given to some friend for
mm-hmm.
a business.
Mm,
So it was like giving away 400,000.
mm-hmm.
And then one of my clients was known to
Mm,
her. So
mm,
she and I have worked for 2 years. We have refinanced their owner occupied home, interest only. We've put more money into super salary sacrifice saving tax. We've just bought two properties in super in the last 6 to 8 months.
mm,
So
mm,
we bought
mm,
mm.
one property and we preserved about 234,000 in their super.
Yeah.
And then again took another 4 5 months to save up more to bring in liquidity. And we just finalized
mm.
something for about 550. So it
Okay.
can be done, even though they're 50 something, 52 years old.
Okay. That's actually a good one, because been getting a lot of conversations from people in that late 40s, 50s. They feel that they missed the boat, but listening to what you just described, there's still a lot of opportunities. As long as they're having the right conversations, right?
Yep.
So,
I actually get very excited because I've just done another loan for a 60-year-old after his divorce and his property got sold.
yeah,
I've given
yeah.
him a 30-year loan term
Okay,
with an exit policy.
okay.
So I think we are going to live longer.
Yeah,
We may not
obviously.
have a concept of retirement.
Yeah.
Yeah, yeah,
So
yeah,
does it mean that you stop buying just because you're 50 or 60? I think
60.
it's wrong.
Yeah.
yeah. Yeah,
You
I
know,
want to throw that question quickly to Rajveer before, I give my comment on this topic. Rajveer, what do you think about, quick yes or no, if you have to say, obviously, with
Yeah.
conditions apply,
Yeah.
is this the right opportunity, or do we still a good opportunity for us to build wealth through property in this current scenario?
Yeah, it's always a good day to buy any asset class.
Mm,
If we go back in 2020, do a time series calculation or time value of the money, you will find
mm,
the same answer, which I'm going to say yes. So
mm,
it's always the best time to buy any asset class. Uh,
yeah,
it's always rather than should have, it should be you should act.
correct,
Okay,
correct.
so that's my hypothesis or my analysis on building wealth through property
Okay.
or any other asset class.
So you are emphasizing on the word act. That's the most important one is people listen, ask everything, but they fail to take those decisive action. Very, very well said, Rajveer. Thank you for that part. I think my view is also always the same, but especially just tying back to what sort of happened during COVID was the cost of building, raised, right? For obvious reasons and everything, because we had a global unrest and everything, especially because of the fuel challenges that we are having. Logistically, it is going to be a challenge in terms of transporting goods and all of that, right? And all of the other challenges that Rajveer has spoken about, the small business are impacting. Feel the cost of building is going to have another big chunk, and
Mm,
what it's going to make is all of the existing assets value is also going to go up, meaning all the property prices and everything, which is
mm,
already going to go up. So I think it's a golden opportunity for somebody who's financially ready and who's able to have the right conversation to go buy that property. I
mm,
feel there is always going to be an opportunity.
yeah,
So in terms of CGT and negative gearing, which you have spoken in detail in the previous episode, I feel those are things that are not in our control. If that happens, we just need to figure out what is the way to manage and move forward
yeah,
rather than stop investing. It's almost feeling like saying that I don't like paying tax, so I'm not working, right? That's really not the right argument to have. I
yeah,
feel the same way, right? And the other point I just wanted to emphasize is people talk about think of negative scenarios. Oh, what if we lose the job and everything? Those are absolutely valid. And as long as they're able to make the right decisions moving forward, I always tell properties in Australia, as long as you have not done a big blunder, you're not going to lose money on it. Right. So even if they buy a property after a couple of years, they have to leave, get away from the property. They may not get the biggest profit, but they're not going to incur the biggest loss also,
mm,
as long as they have not done the biggest blunder. So that's what I know always encourage people to think objectively before making that decision, and look at the different scenarios. I'm from an analytical mind. I like to look at it. Okay, what if this happens, that happens? How do we manage it, right? So it helps people moving forward and everything. Yeah. So I think it's good to hear all of your feedback aligned to it. Um, Now I would like to ask this one thing. I know we are hosting a session next week in Fiddler's Rousel. I want to first ask Rajveer, what is that one thing that will be able to be the value for somebody who comes to that event?
Look, the biggest value for anybody who would be coming into the event would be the expertise we are going to bring onto the table. We've been into this profession and advising the clients. From the tax perspective, you would see us advising onto different structures and giving a bit of snapshot what's happening, contemporary news, where all this noise from big newspapers or negative going to change, capital gains going to change. What actually it's going to happen is we're going to present to you in a way that, hey, what effect it going to bring onto your taxable income if what it we can say it's a what if analysis. Uh,
Mm, mm,
that's the good thing if you are attending that presentation with us. The other thing I would say, look, from just not from the tax perspective, we may be looking at a very small lens where we just saying, hey, this is the tax, this is the savings, and that's our mind. But let's say as Madhuji has worked 30 years in her profession, she might have a different view of seeing things, not only
Mm,
from the
mm,
tax perspective, just from
mm,
the lending perspective, how you can unlock cash flow in your probably in a business, or maybe you paying too much rent for your commercial property which you're renting right now, or maybe there is another opportunity which one of the lender may lend for 80% to 80% LVR.
mm,
Same goes
mm,
with you, Dilip, where you're going to bring in a different angle of property investing, where you're going
mm,
to bring the analytic or statistics. Uh, both things going to come together, and you say, look, how you pinpoint something. Let's say, pick this property. You know, that's the value people going to get through this presentation.
absolutely. Thank you. I think it is about getting that clarity and also the collective knowledge and advice of three people sitting in one room.
Yep,
Being so the lending, tax, and property, right?
yep.
So thank you for that,
I mean,
Rajbir. Now, Madhu, what is that value you feel anyone coming to that event is going to get?
I have for the last 30 years focused on people who are looking and having the kind of problems that I've had as a migrant.
Yeah.
So I have been very migrant focused
Mm,
and very focused on getting the best outcomes for people who can navigate in a very difficult landscape. It was
mm,
equally difficult 20 years ago as a migrant.
mm-hmm,
It will continue to happen with all the wars, people moving
Mm,
across continents.
mm,
It will is going to happen here, whether it's due to tax changes
mm,
or a global, recession or anything like that.
mm,
The whole idea is to share the knowledge one has
mm,
and giving them tips whether you want to upgrade your home even
mm,
though you are in your 40s,
mm,
or you are suddenly finding that you are having your second child and you
mm,
have to stop working. How do you manage these kind of life, situations, and equipping people where they can relate, whether you are a young person, you want to get into a first home buyer
mm-hmm,
situation,
mm-hmm,
whether you are a middle age having their first child, getting upgraded income. As much as we talk about incomes going down, there are also
mm,
situations where people are upskilled, and we have come across clients who earn more than 300,000. So
mm,
managing
mm,
their tax, managing their cash flow is
mm,
as important as somebody who's earning 60,000 who's aspiring to be a first home buyer.
mm,
But the
mm,
whole idea is to give people a bit of a big picture understanding that whatever you're doing is
mm,
ultimately for the years
mm,
that you need passive income.
mm,
Because
mm,
what will the landscape look like if you were to stop for a year to have a child,
mm,
or to retire and you want to work part time, or you want to
mm,
don't want to work at all, or
mm.
you have to help your children. There
Yeah,
are many equations where the bank of mom and dad is now bigger than some of the big banks, because
absolutely.
there's huge wealth transfer happening,
Yeah.
and we are very much part of that. Uh, you know, how should I say, bridging the gap between two generations, helping
Mm,
the
mm,
first generation give help to the other generation in a manner they
mm,
mm,
feel
mm,
valued. Both of them feel what we are getting is also precious, and the
mm,
parents
mm.
also want to say that, look, we worked very hard. Is it
Yeah,
going in the right structure? Is it going in the right hands?
yeah, yeah.
So I think we will give people a Q&A session as well as
Yes.
hearing some stories.
Yeah,
And I just feel that most of the equations or situations that one
yeah.
has happened in the earth many times before.
Right, right. Yeah.
And if you have the community of people, whether they're existing clients or they're aspiring clients or they're just friends or other, professionals who come along to support each
Yeah,
other,
yeah.
the answers are in the room. So
Absolutely.
please ask, please
Yeah,
come to the 23rd of April to the
yeah,
Fiddler's Cafe. We will put the link on the podcast. Please book and come. If you forget to book, you can still book at the venue.
yep.
But I think it is something that you can just come and ask. It's a free event, and we want to be of service to the community.
Absolutely. Thank you, Madhu. I think what I really love is like, no, your human aspect of like, everything that you talk is what is making really it's unique. Like, no, it's not just a transaction. There is there is a human family behind it. Like, how do we really make it right? One point I really liked about what you mentioned is, um, normalizing. People feel that like, when something especially negative happens to them or about to happen, they think that they are the only one in the world that is happening. But going to such networking event where you are like, not only learning from the experts but also learning from your peers who are sitting next to you, that is a big learning experience. You're able to normalize it. Okay. And there is, as you rightly said, this is not the first time this is happening. People have succeeded, and like, in best of situations people have also not succeeded. So it's all about learning and like, applying what it is. So I think it's going to be a great evening at the Fiddler's Rousel. We'll put all the details
And you
at
can
the
buy
bottom.
drinks if you get bored.
Yeah, absolutely. We'll have nice refreshment and everything. All three lovely people. More than interacting in this like, digital framework, digital media, I think
It's a
we'll be a
life.
lot more like, friendlier like, when we meet in person. Looking forward to meet everyone there.
Absolutely.
Yeah.
We look forward to having everybody there.
Yeah.
Yep.
And
Yep.
thank you. Very appreciative of all your support in doing what we do.
Absolutely. Thank you, Rajvir. Thank you, Madhu. It's been a lovely conversations. I think every time we meet, rather than having one-on-one conversation, I'm thinking like, this is working much better. Three of us there, like,
No,
having
no, I like coffee. Man, you need to come to cafe and we must have a coffee.
definitely. All right. Thank you. Lovely
Thank you
having you
so
both.
much. Thanks, Rajveer. Bye.